Hello, this is Cynthia Fick, and this is the January 13th stock market update. Well, today I promised I would talk about 2026, kind of some projections or thoughts of what we think might happen. And then I want to talk about some of the sectors that we like. There is a broadening out of the market going on, but we still have sectors that we're preferring. So what's happening in the market so far? Well, the first 5 days of any year usually historically have dictated how the market does for the rest of the year. And they were up. That's a positive going into 2026. We also have the possibility of a new Fed chair that I think will be receiving a fair amount of pressure to lower interest rates. And so that may continue, which the market, that's a tailwind. The market really will like that. Another thing, tariffs are just not as big a deal as they were last year. They're either going to be the same, lower, and if anything, we may have to start worrying about refunds potentially. We'll just have to see. So that tariff worry is out. Earnings may come in stronger than we've expected, kind of broadening out from just the Magnificent Seven to all sectors of the market. So that's kind of an interesting thing. So stocks are at all-time highs as of last week, but a lot of the markets still have the earnings to back up those prices. So at this point, with what we have in front of us and what we're seeing, financial life planners still continues to be overweight in things like the S&P 500, large company growth, and technology. The question now is, where should we continue to overweight? Not that maybe the financials did pretty well last year or small caps started doing well, but how did they do in comparison to the strength we have in our core holdings, which continue to be large company? Okay, so let's start off with a chart of the S&P 500. And here we're just kind of looking for any signs that we may be getting pretty close to a pullback in any of the averages. So this is S&P 500 going back to 2021 and shows you the pullback we had in 2022, the pullback kind of quick one we had in February through April of 2025, and then where we are right now. You can see we're well above any of these moving averages. It to me looks like, smooth sailing. This right here looks a lot more like this than it does like this right now. So we'll continue to watch that throughout the year. So that's the S&P 500 in general. Okay, so this is what we continue to stick with and what has done the best: large company, specifically growth, and specifically technology. So let's compare the S&P 500 to the NASDAQ. This is the NASDAQ 100, the top 100 stocks in the NASDAQ. It's mostly tech companies, and that includes a lot of the Magnificent Seven stocks. So when you see a comparison, and here again, I'm comparing the NASDAQ 100, which is mostly tech stocks, to the S&P 500. You can see when this chart is going up like this, that means the NASDAQ is outperforming the S&P 500. That's a long-term strength and kind of overweight that sector type of look. When the line begins to go down into a downtrend, that's when the S&P 500 is outperforming the NASDAQ. So since the end of 2022, we've had the NASDAQ outperforming the S&P 500, and it is finally kind of broken out right here to the positive where the NASDAQ is kind of leading. We're coming back and touching those lines, so we'll be watching that. Will the S&P 500 start to outperform QQQ, which is mostly large company growth and tech stocks? Okay. Let's look at semiconductors, which are pretty good representative of technology, because you can't do much with semiconductors if they're not involved in some sort of technology, right? Let's look at semiconductor index versus the S&P 500. So when this line is going up, we have an uptrend in semiconductors. Semiconductors are outperforming the S&P 500. And you can see in 2024, all of a sudden the S&P 500 was outperforming semiconductors. Well, in April, after our downturn, the semiconductor started outperforming again. So this is technology. So technology, again, is outperforming the S&P 500. S&P 500 is outperforming pretty much everything else. Technology, QQQ, is outperforming the S&P 500, and semiconductors are outperforming all of them. Okay, so that gives you an idea of what we think about technology. There is a definite uptrend that has not shifted, even with the turn down we've had since the last quarter of 2024. Technology is stronger than the S&P 500. The next one, financials started to do better last year. So let's see, should we overweight in financials? Here we see financials come first, and so this is a long-term downtrend compared to the tech sector. Financials have not done nearly as well and have been as strong as the tech sector. So so for this whole period of time, we had a little blip up for part of 2025 when financials were doing better. And we're nowhere near breaking this downtrend. Tech is still better than financials. So gold has done very well. Look at this. This is still this is when gold was doing well. From 2005 to about 2011, it topped out, and then it's just been a long-term downward cycle. It tried to break that cycle in 2020 or so, probably because of the pandemic, and was turned down. And here we go again. Gold is doing really well. We've kind of broken into some of these moving averages, which will be very interesting to see. And I can tell you we're watching this. So this is what we see going forward. We're always watching this. If something changes, we most certainly will overweight in other sectors. We just don't see it yet. So that is an idea of what we think about 2026, and we will talk to you next week. Have a good one. Bye.